Buying a business can be a scary thing to do. It's not like buying a coffee at your local coffee store, nor is it even like buying a car, which is a typical high-ticket expense in most of our lives. It is even on the smoothest transaction of buying a business, it can feel emotional, stressful, and just draining to get it done. And all the while you're doing it, you're always asking yourself, am I about to make a huge mistake with a bunch of my money? Those are some very common fears when it comes to buying an online business. So let's talk a little bit about what you can do to bring this fear in where you can control it and where you can acquire a business that is your dream acquisition. In this video, we're going to discuss the simple fundamentals and demystify what you need to know before you actually buy a business. So let's get into it. Hey everyone, my name is Gregory Elfring. I am the Director of Marketing at Empire Flippers. We are the #1 curated marketplace in the world when it comes to buying and selling online businesses and digital assets. So in this video, I'm going to give you a bonus tip at the very end where I'm going to help you find a way where you can find dozens and dozens of profitable businesses for sale at any given time of the day. So stick around to the end of the video and I'll share how to do that. Also, if you've been liking our video content, or maybe you already really love this video, don't forget to hit the subscribe button and you will get updated every time we do a new video. And that also helps us to get more exposure on YouTube and in general, get more likes and shares, which can help us a lot. So if you enjoy this video, please go ahead and do that. It would mean a lot to us. And I'm sure it means a lot to you too, right? So first off, let's talk about why buy a business at all. So there's two main paths that you can travel down if you want to be an entrepreneur. The first one is building a business from scratch, which is by far the most common way to do it. But it is also the way that is riddled with the most amount of failure. And the reason why it is riddled with so much failure is because when you're starting a business from scratch, what you're really doing is what I like to call trading in unknowns. As in, you don't know if the business will be profitable, you don't know if the niche is a good niche, you don't even know if your product is a good niche, or if there is any kind of marketing you can do to reach an audience that wants that product or service. So you're trading in a lot of unknowns, and unfortunately, a lot of entrepreneurs make bad calls on this, and that is why a lot of businesses end up failing. Now, there's another path to success in entrepreneurship that doesn't require starting a business at all. It requires instead you buying one. This path through acquisition, entrepreneurship through acquisition, is actually a lot more successful in terms of the success rate. Now, I'm not saying it's 100%, but you are basically stacking the cards of the deck in your favor because you're not trading in as many unknowns. You already know the business is profitable, you know it has a niche that is lucrative, and the people actually like the products that the business is selling, otherwise it wouldn't be making money, and it most likely has some sort of marketing channel driving that revenue, right? So you're trading in less unknowns, it's less risky because of that, but there is still risk involved. So don't buy a business thinking it's a guarantee. We have seen people buy businesses and the business just tanks, flatlines, and goes off a cliff, whatever, right? Of course, we've seen the opposite direction, and we're happy to say that over 60% of, I think it's actually around 70% of people that buy businesses from us, I'll link to the ROI studies below in this description we did, tend to either see growth in their profit or they maintain their profits. And even the businesses that do decline, they rarely decline all the way where they're making zero. Usually they just get hit a few times and sometimes they can recover. But anyways, I digress. There is an old line that you're probably familiar with that actually resonates when it comes to buying a business. And that is the line, what is in motion stays in motion. Now, what this means when it comes to entrepreneurship is there's a very common line in entrepreneurship, which is it is easier to go from 5K a month to 10K per month than it is to go from $0 to your first $1,000 per month. When you buy a business, you're buying something that is already in motion, versus when you're building a business from scratch, you're trying to get something that is at a standstill to start getting into motion, right? So buying a business, you're already in motion, and so it is often easier at the end of the day to scale it up to a higher level and make more money quicker than it is by building a business from scratch, for all the reasons I just mentioned above. So let's get into it and dive into the 4 fundamentals that you need to understand before you buy a business. All right, so what are the 4 fundamentals? So they can really be broken down into a few different categories. There's your personal and business goals, those count as 1. There's your budget and working capital, There's your current skill set audit that I'll talk about in this video, and then there is your actual due diligence system. So let's dive into each of these. And as always, I have said these bullet points out of order on accident, so they will be discussed in a different order. All right, so first one, personal and business goals. This is a fun one because a lot of people don't do this, and I think it is incredibly useful exercise for you to do. So let's start with personal goals. When we're making our personal goals, we want to pretend we're in this dream world where we don't need necessarily any money. We can do whatever we want. And the reason why I say that is because the money stuff is more tied to the business goals. So when you're making up your personal goals, I want you to play with that exercise of just asking yourself, what does a successful life look like for you if money wasn't an issue, right? What would your life look like? Maybe you're very lifestyle focused where you want to go travel the world, take cool Instagram pictures, all that kind of stuff that I am absolutely terrible at despite traveling the world. Or maybe you want to stay at home, not do your 9-to-5 commute anymore, and you want to just stay with your family and do a lot of cool things with them. Maybe you want to buy some crazy rare book or become a rare book collector. It was a dream I had when I was a kid. Sorry, I'm projecting. But whatever your life goals are, your personal goals are, these are very, very important. And you might think, well, why are they important to buying a business? And the reason why is because you should be buying a business that helps you get to that goal. You got to ask yourself, how does buying an online business help me achieve this personal goal, the best version of me? How does that fit into the plan? And that's very, very important because your personal goals will make up the foundation for everything else that you do in your life. So now let's move into your business goals. Business goals, like I said, are much more tied to money. And the first question you should be asking yourself is, how much money do you want to make? Now, most of you are probably saying, I want to make millions, I want to make billions of dollars, right? Well, everyone wants to do that, so slow down. Let's not use that as our business goal. Now, becoming a millionaire, absolutely possible. Billionaire, less possible, but definitely doable if you really work hard. But what I'm really getting at when it comes to writing your business goals is let's look at the different levels in our life that we can achieve through income. So the first one for a lot of people watching this video, the first thing you need to figure out, what is the number to replace my job income or my other source of income that I'm using right now? What would it take for me to replace that? Write that number down. Now, the next thing you need to look at is what would be enough money to have a major upgrade in my lifestyle? Now, maybe that's the exact same number that you have right now, right? If you're working 9 to 5, which is really 70 hours a week, especially when you include the 10, 20-hour commute per week or some crazy number like that, then just replacing your job income where you can quit, that might be a huge lifestyle upgrade, right? But of course, everyone is different. So your numbers might be different from the job replacement income, but write those down, write that number down anyways, even if it is the same, just so you can follow along with the exercise. The last step you want to look at is, what is my financial freedom number? Now, when I say financial freedom, I'm not saying you're free from your 9 to 5, because even if you're free from the 9 to 5, doesn't mean you're free from having to work, right? So they're very two different things. Financial freedom should be the actual dollar amount you would need for the rest of your life to never have to work again. Now, I do advise always working on something, but the beautiful thing about hitting your financial freedom number is you get to work on things that you actually enjoy, that you want to work on. Maybe it's art or painting or writing a novel or whatever you want to do. Maybe it's more businesses, right? A lot of people get really passionate on entrepreneurship, and maybe that's something you really cultivate as you build your businesses. But whatever it is, ask yourself what that financial freedom number is so you have the end in mind. You should always start everything from these personal and business goals because they're the foundation of who you are, and they also have the end in mind of what your dream life really would look like if you had achieved your goals, right? So we want those goals in there. So let's move on to the next one. When I said earlier that I said these out of order, this is what I mean, because now we're doing the current skill set audit instead of the budget and working capital. But don't worry, we'll get to the budget and working capital here real soon. So when I'm talking about the current skill set audit, this is a very, very important exercise, especially if you're brand new to online businesses. And this is where we look at what current skill sets do I have that translate into running an online business or buying an online business. Now, if you're brand new to the space, that answer might feel like nothing. But here's the good thing. Usually that's not true. there's a lot of what I call hidden in the bush skills that translate over to running an online business. So some of them might be very, very obvious. So maybe you have a marketing background, you're doing SEO for a big company, or maybe you're doing Facebook ads for a big company, something like that. You already have a lot of the skill sets you need to run a business if that's your background, right? But sometimes people don't translate that over. Some of the less obvious ones might be like having supply chain management knowledge. Maybe you understand how logistics and freight works. That can be extremely helpful and valuable when it comes to running an e-commerce business. Or maybe you have a softer skill. Maybe you're a manager at your company, but you are an effective manager. You're good at what you do. You'd be very impressed at how many seven-figure sellers we see all the time, and seven-figure entrepreneurs in general, that are not so good at management. Maybe they're really good at marketing, but they're not exactly good at cultivating a team and good culture. So that is one of the most powerful skills you can have, because your ability to delegate effectively and to measure the people you delegate effectively is one of the largest wealth generating skills you can actually ever have, because you can't really grow a large scale organization without the power of delegation. It's just impossible to do for the most part, unless you become Stephen King, who is obviously not a large organization, but definitely a large income earner. But most of us are not going to become a famous horror writer that lives in Maine. So with that said, do this exercise. All you need to do is take a piece of paper or open up a spreadsheet and say Google Drive, spend 30 minutes and write down a list of all the current skills you have right now, everything. Even if you think that they're not really relevant to running an online business, chances are there might actually be some relevance there and you just haven't thought about it in the right way. This is where a little bit of our creativity comes into play here. But do the exercise for 30 minutes, write down at least 10 skill sets that you have, and try to do more if you can, but make 10 your minimum, even if you need to stretch your creativity. The whole point of the exercise is to get us to be thinking a little bit differently, and instead of just looking at acquiring an online business, actually start applying who we are to running an online business that we might acquire. So do this skill set, and if you find out at the end of this 30-minute exercise, you have the really depressing results of I have nothing, I'm not skilled at all, that's okay. It's not always lost. What I recommend in this case, if you truly feel like you have no skill sets at all to run an online business, I would recommend starting with marketing. Marketing is one of the most important parts of running an online business, so that is a good place to begin. I would recommend buying a $2,000 course on SEO or Facebook ads or something like that. And you might think, God, that is wicked expensive for a course. But let me tell you, it is a lot cheaper for you to buy a $2,000 course on SEO from a verified good person in SEO and find out you absolutely hate SEO than it is for you to spend $200,000 on an affiliate site that, one, you don't know how to run, and if you did, you'd hate it, right? It is a lot cheaper to buy the course and get some education before buying an online business, and way less risky. So that's what I recommend if you're in that position where you just don't feel comfortable yet. Go out there and get some education. All right, now let's move into budget and working capital. So budget and working capital are actually two different things. Budget is the amount of money you have to spend to acquire an online business. So you have a budget of $300,000, you can acquire a business upwards of $300,000. Working capital is different. You should never be spending all of your money, like the entirety of your net worth, on buying an online business. That is a very risky proposition. And in addition to that, you shouldn't be spending all of your liquidity on buying a business either. Instead, you should differentiate the two. You should always have a little bit of working capital for after you buy the business, so you can actually run the business successfully. And by having that working capital, it puts you in a less risky position because you can be a little bit more flexible in what you do and how you operate the business. So let's first talk about budget and the rule of thirds. So the rule of thirds is very, very simple, and it is designed to help you, especially if you're brand new to the game, stay in the game of acquiring online businesses longer. So again, let's say your budget was $300,000. The rule of thirds would dictate that you can only buy one business that is worth a maximum of $100,000 because you only have $300K to spend. So whatever your budget is, cut that up into thirds. The reason why we do this is because your first business you acquire is going to be littered with mistakes, most likely. Even if you use a reputable broker like us that is here to coach you, there's always things that wasn't thought about or wasn't planned for, or surprises that happen, and you want to be prepared for this. You don't want to be where you spend all of your money in one go and realize you made a terrible newbie mistake. Now, obviously, we're going to help you avoid the vast majority of those newbie mistakes. If you come to us and you ask us for help, we're happy to coach you on that. But even if we do coach you on it, there is a chance you're still going to make mistakes because you're new, and that's normal. When we do new things, we make mistakes. So we want to make sure we're playing with the deck stacked in our favor again, where we allow ourselves to be able to make mistakes, right? So that first business riddled with mistakes, you probably learned a lot of really valuable things from it. When you go to buy the second 100K business, you know a lot more about the business, you know a lot more about what you want and what to do. And by the time you get to the third acquisition, the last 100K in your budget, you not only know what to do and how to run the business, but you know what to avoid, right? You know all the traps now because you've not only have acquired twice, but now you're running two businesses. You understand what it goes into this. So you're coming at that with a much different view, and most likely that third acquisition will be one of your most successful ones because of all this knowledge of you getting, as they say, dirt on your jersey, actually playing the game. And because you did the rule of thirds, just because you fell down in the dirt once, doesn't mean you can't get back up and keep playing because you did good planning. So that's what we recommend, rule of thirds. So now let's talk about working capital. Working capital is going to change based off, one, the size of the business you're looking at and your own level of risk tolerance. So if you're looking at buying, say, a $100,000 business, I usually recommend having a working capital of 10 to 20% of the valuation of the business. So in this example, you'd want to have about $10,000 or $20,000 in reserves to run the business. And you don't use that money for anything else except for the business. That is what I recommend. Now, of course, you might do this with zero, and that's okay. If that's your risk tolerance, if you're okay with that, that's absolutely fine. But having that 10 or 20K helps you weather some storms, some growing pains, or allows you to scale up quicker by hiring staff, hiring services and agencies, or maybe upgrading the infrastructure of the business so it's in a better, more streamlined position to be even more profitable. So don't forget about working capital. And again, it comes down to your own risk tolerance and what you want to do, but I think it's a good thing to have and makes you in a less risky position. All right, now we're in the fourth fundamental, and this is by far the most important thing that I'm saying in this video, outside of the personal and business goals, like having a successful life and all that stuff. Obviously that's more important, but everything we just talked about works into this final step, and that is due diligence. Your due diligence system is the most important tool you have in your toolkit. It is the thing that can make or break you as a savvy digital asset investor. So let's talk about a little bit what goes into due diligence. First of all, what is the goal of a due diligence system? The goal of a due diligence system is to be able to disqualify businesses as quickly as possible to get them off of your desk so you can move on to the next business that comes your way that's for sale. And the reason why we do this is you want to be looking at a lot of different businesses, not just 1 or 2 or 10. You should be looking at 20 or 30 ideally. And out of those 20 or 30, maybe 10 of them look interesting. And out of that 10, maybe 3 are worth going deeper into. So that is the goal of a due diligence system. It is a series of checklists and a series of filters that you look at. So there's 3 main components of a due diligence system, and those are your initial criteria, the deep dive, and the buyer-seller conference call. So the initial criteria, it uses a lot of what we just talked about. So your personal and business goals, your working capital and budget, and your current skill sets. Notice how I messed up that bullet point again, sorry, but you get what I mean. So you're using everything we just discussed to create your initial criteria, what you're looking for, and you're still confused about how to create initial criteria. Don't worry, we can actually help you. I'll leave a link down in the description below. You can schedule a 20-30 minute call with us for free, and we'll help you discover what your criteria is that makes sense with what you want. But anyways, so you look at businesses and you want to see, do they meet my initial criteria, this checklist I have? And you should be able to answer this question within 5 to 20 minutes, 5 minutes to 20 minutes of looking at any given business. And most of them probably won't. So you just keep throwing them away until you get another business that hits as many of the check marks as possible. Now, if you make your criteria too narrow, no business is ever going to hit your check marks. And if you're too flexible, every business is going to hit your check marks. So it's all about having a happy balance. You should be both loose and strict with your criteria. Know what parts you're not willing to bend on and what parts you are willing to bend on, because most businesses are not going to match 100% of your initial checklist. It's just a barometer of quality to help you weed out and filter businesses that probably aren't a good fit for you. So once you have a few businesses that pass that initial criteria check, the next step you want to do is the deeper dive. Now, the deeper dive can look like many different things. So if you're doing a private sell, maybe this is where you're asking the seller for more intimate information, more data on their analytics, their P&L statement, asking them various questions about this and that, all that kind of stuff. And a lot of times this is done over like email, sometimes over a phone call. But if you're using a broker like us, all you have to do is simply unlock the listing. When you get a free Empire Flippers account and you verify your liquidity, if you see a business you want to do a deeper dive on that meets your initial criteria, you just hit the unlock button, you get access to all that intimate information for you without needing to speak with the seller. So there's there's a huge benefit. So make sure you go and get a registered account with us. But anyways, once you've done the deeper dive and it passes the deeper dive checklist for you, it's time to move into the third part, and that is the buyer-seller conference call. Now, this doesn't always have to be a phone call, but it most often is, especially when you get into higher pricing businesses. So like 200K, 500K, or the 7-figure or 8-figure range, you're almost assuredly going to be doing multiple calls at this price range, right? But for smaller businesses like sub 100K, sub 50K, sometimes you don't have to do that. It's just email based a lot of the time. So keep those things in mind. But the real goal of the buyer-seller conference call is to get a feel with the seller. So even on the smaller deals, I would try to do a call with the seller, because what you're looking for is a few different things. Not only are you asking your final high-level questions that usually are very specific, so you need to talk to the seller at this point, but you also want to get a gauge on who that seller is and how they feel to you. Do you feel good working with this person? Do you think they seem like a cool person, a good person, both personally and professionally? Because there is a good chance that after you acquire this business, you're going to be working with the seller for a little bit. Now that might take many different forms. Maybe it's once a week support calls for 30 days, or maybe it's something a lot more extensive. But there will be at least a short period of time where you are working with the seller in some kind of capacity after you take over the business. So you want to make sure that you just get along with the seller, that you like them, right? That's a much more important factor than people think. And the buyer-seller conference call, because getting a gauge on someone only matters if you're truly interested in the business, that's why we leave it for last usually, to see if you can really get along with this person. Now, again, if you're using us as the broker, we publish what are called seller interviews every single week. And this is where we actually interview the seller in a podcast format. We upload it as a video, but you can also check out our Real Money, Real Business podcast. I'll leave a link below in the description to those. And you can get a sense of who the seller is through that audio interview that we do. But you should still do a buyer-seller conference call, even if there is a seller interview, because you're just doing yourself a disservice if you don't. So that is the due diligence system wrapped up all in one. All right, so that is the 4 fundamentals you needed to know before you buy an online business. So buying an online business is an awesome way to generate wealth. In my opinion, it is by far the fastest way, especially in online business, to create an immense amount of wealth in a very short amount of time. But with that said, it's not a get rich quick thing. You're going to have to do a lot of real work. There's going to be a lot of sweat equity. You're going to be stressed out. There's going to be problems. And that is just the life of an entrepreneur. So keep that in mind when you do invest into an online business or an offline business for that matter, or building one from scratch. That's just the nature of the game. But if you treat investing into digital assets right, with the right sense of seriousness, and treat it like a real business, then this kind of investment of active investing is going to far outpace things like real estate investing, stock market, all that kind of stuff. You will often get really aggressive ROI when you treat an online business correctly. And that includes even if the business declines, because typically the ROI or the net profit that you're getting every single month from an online business is very large in comparison to the actual value of the business you paid for. So all that is awesome stuff, but you need to treat it seriously if you're going to do it. All right, so now that I'm off my soapbox talking about how you can change your life by investing into digital assets, let's talk about the bonus tip here on how you can go and find these businesses. And to To be honest, it's not even a secret at this point in the video. I've already told you it several times throughout this video, but if you go to empireflippers.com/register, or you click the link below in the description, you can get a free Empire Flippers account. And we release new businesses every single Monday of the week. And we always have dozens and dozens of vetted online businesses that our vetting team has looked at and reviewed the P&L and traffic and all that kind of stuff that you can go look at to acquire on our marketplace. When you sign up for a free account, remember that an initial criteria check I told you about? You can actually use our marketplace account to use different filters and different search functions and watch lists to help speed up that process even more for you. So if you like this video, make sure you subscribe. It will help out my self-esteem quite a lot, and that is very important to me. And also it helps out the YouTube algorithm, which is very important to my marketing team. So go ahead and also leave a comment down below. Why do you want to buy a business? Do you want to buy an online one, an offline one? Why? What do you want what do you want to get from buying an online business? Love to see your comments down below, and hopefully I get to respond to a few. Talk to you guys later. Bye.